From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Not a great day for people in the markets today. Of course, we had the Fed coming through overnight with their anticipated quarter point cut, but the dot plot signalling fewer than anticipated cuts in 2025, sending traders to push the sell button, and that flowed through into our market. You can see there that the CBO 200 is down 1.7% as we finish out the day's trade. The ASX 200 also weaker by around 1.8%, 145 points, 8,163, and really hard to find any bright spots today. A couple of moves in some of the financials, some of the insurers as well. But other than that, looks very sort of dire out there. So did Jay Powell scare off Santa? Certainly seems that the so-called Santa rally we have been waiting for, which many had said, look, perhaps it already happened in November, has taken somewhat of a backseat. We, of course, had a good rebound coming through on the market yesterday, or the day before, I should say, but there has been quite a bit of weakness coming through in these equity markets, and we are now off by around 2% today, with every sector heavily lower. Also, this flowing through into currency markets. Of course, the US dollar very much bid. We saw the greenback hit its highest level since October 2022, the dollar index, and that's flown through into weakness in the Aussie. We've also seen weakness in the yen after the Bank of Japan stood pat with its rates when there was expectation potentially of a hike. And the South Korean won also getting smashed, along with the Indian rupee, which has hit a record low. But one stock heading higher was Mesoblast, blasting out of the blocks today, up by about as much as 40%. And that's after it got US FDA approval for one of its therapies. Let's have a quick look at the themes, or the sectors, I should say, because as I mentioned, all 11 lower, quite a bit of weakness coming through in those tech stocks. Xero and NextDC both off by about 2.5%. The miners also hit hard, particularly with iron ore futures in Singapore tumbling. Fortescue down 4%, $17.86. And the banks as well. Of course, we had the ANZ pay fight flowing through into that as well. Shayne Elliott, the outgoing CEO, not getting his long-term incentive. ANZ shares down 2.8%. Westpac, NAB, CBA also weaker, and Macquarie Group down by 1.4%. Let's have a quick look at some of those stories. Mesoblast actually up by about 52% on the close. The US FDA approving its cell therapy Ryoncil. ANZ, we mentioned, tracking the broad sell-off in the banks, and more than a third of shareholders voting against its remuneration report in a significant protest that did see Shayne Elliott give up bonuses worth more than $3 million. Paladin was the stock of the day. It was cleared by Canadian authorities to progress its acquisition of fission uranium and will now list on the Toronto Stock Exchange. Patriot Battery Metals also tracking higher after an injection from German car maker Volkswagen worth about $77 million, but AGL under pressure. It's been ordered by the federal court to pay out about $25 million over customer failings. Let's get his take now on the market action, and welcome to the COB, Jimmy Jang from Macro Capital. Jimmy, we know that the Fed cut was widely flagged, but it does seem that the forecast has spooked investors.
Afternoon. No, of course. I mean, the about 96 to 97% chance of the Fed cutting the rate by 25 basis points, which obviously did occur. But what kind of spooked the market was the outlook for the next 12 months. So as you mentioned earlier, the market was anticipating about 25 basis points, a full 1% rate cut by end of next year. Now we're going to see about probably 50 basis points, and the market is reacting very quickly overseas, and as we have seen in the domestic market today as well. So I think what the main thing is, this is very purely, from our view, largely psychological. The Fed has done a good job so far controlling inflation, in our view, without triggering a recession or a surge in unemployment, obviously evidenced by the stable core inflation rates and a very gradual decline in wage pressures. But these indicators obviously suggested that the Fed's cautious stance is not only prudent, but it's also supported by the measurable progress. So what's kind of really spooked the market is obviously with the signs of the labor market softening and also lingering the big uncertainties that we're anticipating in the US, which is the Trump government coming in and how that kind of inflationary policies will be kind of coming into the market and impact the inflation overall, and how that's going to dictate the Fed's decisions, even on top of what we saw last night with the bit of the push that the Powell's taking, or the cautious is taking, to make sure that he doesn't cut any rate any further as aggressively as the market has anticipated. So what do we need to kind of see in the market as an investor is probably understanding overall, what's been happening in the market. So the S&P 500 is up nearly 25% just this year. So that kind of breather was inevitable, and we've been kind of preparing for that bit of a downturn for a while now ahead of the Christmas rally. And the sentiment surveys also showed that there are a lot of fund managers and the retail investors is still very extremely bullish with a record allocation to equity. So what we're seeing at the moment is a great opportunity for long-term investors because a lot of these fundamentally strong companies, especially in the materials sector as well, guys like BHP, are at a significant discounted price from our view. So it presents us with a really good opportunity, not something to celebrate, but definitely something to kind of keep a dry powder for a while that we've been doing to start really reallocate.
Yeah, well, that's the point, isn't it? I mean, you get spooked by these 2% falls, and of course the commercial networks like to say how many billions has been wiped from the market in one day, but it brings into a buying opportunity potentially as well. What's macro been looking at?
A lot of great sectors and the companies are on a really good discount. BHP could definitely be one of them, but I won't go too much in details about BHP today. But the one company that we've been looking very closely with, and something that we held a pretty marginal size in our portfolio, was Challenger Limited. So Challenger Limited, for the viewers who doesn't know that much, they have largely two segments. So they have a life and a funds management. And their life segment principally includes the annuity and life insurance business that's carried out by the company. And they offer fixed rate and other retirement and superannuation products that are designed for a lot of Aussie investors who are seeking that low risk and the fixed term returns. And that's really good for this type of market right now, when there's that uncertainties that's kind of spooking a lot of investors. What investors are really looking forward to now is not really that aggressive return, because they've been kind of receiving that kind of aggressive return for the last 12 months. Now what the market is a lot more focusing on is probably a lot more defensive positions like Challenger Limited, that offer that fixed income investors a really good return. So they're offering a pretty good dividends at the moment, roughly about 4.2%. But the reason why we're looking at it right now, even without what we saw this morning from the market, is actually around August this year, we saw Challenger having a bullish break of the market structure. And we also seen a pullback into that discounted pricing in a technical standpoint from our technical team. So that consolidation highlights that the market participants are seeing the real value in Challenger at those $6 mark level. And even in August to early November, we saw that increased demand for Challenger about 9% within about 6 trading days. So that kind of return is something we can expect definitely over the next 6 to 12 months. So we've participated in that allocation in our portfolio, and we'll continue to monitoring that from here onwards.
Now, it's also good to call out when you get things very right. Mesoblast had a fantastic day today, and you recommended it on AusBiz back in June. Just talk us through how well you did there, Jimmy.
Not to put any of my smiley faces out there for the viewers in this current market, but yeah, really great day for macro today with Mesoblast having a really good run. Mesoblast is definitely something that was going through a bit of a turbulence over the last 6 months. There were certain days that was down 10 to 15%, so it was really difficult for some of our investors that didn't have that much of a conviction unless it was provided by our advisors. So we had a lot of good and bad days with Mesoblast over the last 6 months, but yeah, today we had a 52% jump, and that was largely because of the FDA approval in its cell therapy, which is Ryoncil, for their treating life-threatening complications in children that's undergoing the bone marrow transplant. This milestone opens Mesoblast access to a market value at around over $2 billion annually. And that's highlighting that significant revenue potential and affirming the Mesoblast's position as a leader in that cell-based therapies. And this is a breakthrough moment for the company, and not even for the company, for the entire biotech sector as a whole. So it's the second major approval this year, and they're following their recognition of their heart disease therapy earlier. Investors are definitely rewarding the company, and the markets are pulling with the company as well. So it's a good day for us, and still a very good hold for us as well.
Yeah, absolutely. Always good to look at the bigger picture and some of those nuggets. Jimmy, we really appreciate your time today, and of course over 2024. Have a great holiday season. Jimmy Jang there from Macro. All right, the stock of the day was Paladin Energy. Koshi was joined by Mark Gardner from MPC Markets and Ben Richards from Seneca Financial Solutions.
It's not a set and forget trade.
Right.
You know, you can't just sit there and just watch it grind higher. So probably it wouldn't be one necessarily that you would, if you're not watching the market closely and you get worried about volatility, probably not one for you. But
okay.
Yeah.
So
I think it's a buy here. Yeah.
Okay.
But you know, like I said, warning that it's not going to be, you know, necessarily a sleep at night sort of position.
Just a few kind of red flags there. I think uranium as a thematic is probably going to be okay. Do you want to express your view through Paladin? Probably not for us. I'd probably just rather own the underlying commodity as it does benefit from the tailwinds, but no production risk. It does have less leverage, but probably better.
So you go to the ETF?
Yeah, I'd probably just own the ETF or the underlying.
All right, we searched high and low to bring you some market leaders today. Mesoblast, no doubt. They're, in fact, not, maybe in the small end of town. Insignia Financial, though, up 4.5%. QBE Insurance gaining 2%. Champion Iron, Aurora, NRW Holdings as well. To the downside today. Deep Yellow down by 11.3%. We did see some moves there coming through with some of those uranium players. Tech, of course, we mentioned was a laggard. Block off by 6%. Zip down by 9.2%. In the small end of town, we are seeing Patriot Battery Metals. We mentioned there that big movement coming through from Volkswagen investing in the company, sending its shares up by 20%. EBR Systems, Consolidated Ops, and Terrace Technologies and Peninsula Energy also looking good in the small end of town. While to the downside was 40S Memory, as long with Highfield Resources, among other laggards. All right, let's have a look at what we're expecting tonight. GDP for the September quarter from the US, along with the Philadelphia Fed Manufacturing Index, the Conference Board leading index for November, existing home sales for November, and the US Kansas City Fed Manufacturing Index for December. Tomorrow, locally, there isn't really much around, particularly here, but in the region, we've got Japan November CPI, of course, important after we saw the BOJ hold today, and New Zealand November trade balance, also important after we saw quite a dire read on its economy, and of course, sparking speculation that we will see some more moves coming through from the RBNZ. Let's have a look at where the CBO 200 has finished the day's session, down 1.7%. The ASX 200 has had a similar fall today, and the Aussie dollar also tumbling by around 2%. So we're off 141 points, or 1.7%. On the ASX 200, 8,168 points, a new 20-day low. And of course, this coming as markets start to reprice how much stimulus we are going to get from the US Central Bank in 2025. We will bring you the wrap up of Wall Street's washout from the Fed, and of course all that data including GDP, plus what to look ahead for in our market will be live from 9:45 a.m. Eastern tomorrow. See you then.